Welcome to ATF TV. I'm Christine Zhou reporting from London. Today we welcome investment strategist Gary Dugan to ATF TV. Gary, who is the CEO at the Global CIO office in Singapore, joins us to discuss his recent ATF article, Chinese Asset Markets, Time for Foreign Investors to Get Serious. Welcome to ATF TV, Gary.
Hello there.
Hi. So in your article, you say that it is time for international investors to take Chinese asset markets more seriously. Why do you think these markets have been overlooked up to now?
I think largely because they're just seen as an option. So you could get sufficient return around the world. Everything else seemed just a little bit safer. And maybe the political situation for international investors in China was just rather opaque. But that has changed, and it's changed in the sense that people are now desperate for yield, and China delivers it. And I think there's a recognition that China is getting bigger, and its asset markets will get deeper as we go through the next few years.
Okay, so foreign investors are now reportedly buying Chinese government bonds like never before. What do you think is the reason for that?
I think a couple of reasons. I think the credibility of the Chinese asset markets has got better over the last 12 months in particular. And, often when people say China, they'd expect high degrees of volatility, whereas the asset markets, and particularly bonds, have been very calm. The second point is that there's a desperation for yield around the world, and China is still offering yield. Most other countries, and particularly the developed world, are down to zero. And in China, you're picking up, 200 to 300 basis points, 2 or 3 percentage points more than you would do from a US government bond.
And what measure has the PBoC taken to help drive the recent inflow of foreign investment in China?
There's been some, I would call it, structural changes within the bond market, making it much more accessible. We're looking at, for example, an RQ fee license that would allow us to invest in local asset classes, and that whole process has been a lot easier. But the one thing I think that comes from the PBoC is a sense of calmness. I mean, most central banks around the world are kind of fighting to revive their economies and keep things going, whereas PBoC have been very measured, very articulate about their policy, and that's always comforting to bond investors.
Is this story basically one about the PBoC's attempt to internationalize the yuan?
I think there's that maybe in the back of their mind. I'm not so sure that they have the ambition to achieve that overnight. I think they're doing things in a very measured way and making their bond market attractive, accessible, and getting those flows of capital into the country in what they hope they can sustain a renminbi, which is very, very consistent in its performance, which is what we've seen in recent months. All these things add up to measures which help improve the attractiveness of the bond market and in the background, therefore provide flows of money into the renminbi currency.
Has Corona possibly played a role in making Chinese assets more attractive than US ones?
It has, and it's unfortunate what's happened in the West, but with the coronavirus, we've seen the degree to which the Chinese authorities have got on top of the problem, which has been very supportive of a calmness in those asset markets, which I referred to earlier. That has allowed there to be a greater credibility around the markets. So if you're searching for a safe harbor, it is ironic, certainly relative to 2 or 3 years ago, that Chinese asset markets have seemed like a safe harbor. Both in equities and bonds, you could have made good money, but not had to go through the same volatility that we saw in the West.
If we are talking about China, we cannot ignore the Washington-Beijing trade war. So what role is politics playing now? And what role do you think it will continue to play in the future?
I think it's still important, but all it's done is create day-to-day noise rather than fundamentally changing things. I also think, in an ironic way, maybe Donald Trump won't want me to say this, but it's actually put a greater focus on China, which has actually enabled people perhaps to appreciate the asset markets more than they did in the past. So in the past, you would have thought, trade war, why do I need Chinese equities? Why do I need Chinese bonds? And now people are saying trade war, and these guys are coping with it, and they cope with the virus, and their GDP growth is still stronger than it is in the United States. I think I might use this as an alternative in my portfolio construction. So the focus on a trade war has brought a focus on the country, and the country's delivered in its asset markets with good returns.
Well, thank you, Gary.
Thank you, Christine.
And thank you all for watching. For more information on this topic and for the very best market news from China, Asia, and beyond, please visit asiatimesfinancial.com for your daily financial news. I'm Christine Zhou, reporting for ATF TV.